Hello, I'm Janne Muta, Chief Market Analyst for TIOmarkets. Welcome to our weekly market analysis video. In these videos, we take a look at markets that are either trending higher or lower, or they are trading close to significant price levels. This week, the focus is on USD yen, gold, stocks and US oil. And if you can take a moment and leave us a comment, maybe a question or a comment that you would like to have an answer for, and we are more than happy to help you out. And also don't forget to subscribe to the channel so that you don't miss out of any of the good stuff. We don't provide any investment advice. The views expressed on this video are our opinions only, and you should only watch this video if you agree with this disclaimer. The first market on our bullish markets list is USD yen. We have been focusing on this market a couple of times before. First here in February, the market was trading close to this 104.40 support somewhere down here, and we pointed out to the potential on the upside. And the second time we alerted our traders to the upside potential was here when the market traded now fairly close to the channel low, and it touched the moving average, 20-day moving average. So that's when we that's when it was the last time we spoke about this market, highlighting the opportunity there. And now the market is a little different compared to those situations. Then we had the oscillators, the stochastics 5, 3 and 3 oscillator pointing to oversold conditions. But now the market is a little extended. It has been rallying quite hard. There's about 2% move from the level that we alerted you to, and this is about 218 pips. So with this extension, the nearest significant support levels are a little further away, like this high here, which is 106.20 or so, 24. And basically, so this is where we have this high and the 38.2 Fibonacci retracement coinciding. So that's significant if the market retraces there. We don't know when that retracement is going to take place, but obviously when the market does that, when you have retracement, you should look for reactions to the key levels. Now, those of you that love to trade intraday intraday time frame opportunities, you should definitely put this market on your list and see how the market responds to in intraday levels. But we have definite upside momentum here at the moment. We have an excellent account for you to trade these beautiful moves in the markets. You get razor tight spreads. You don't pay any commissions per lot. You don't pay any monthly subscription fees, and you get the TIO Shield as well. So if you're interested, if you're trading a lot, this is a superb trading environment for you. A great account, VIP Black, that's what you need to email our support at TIOmarkets.com about, and they are more than happy to help you further. So that's an amazing package. Just make sure you have access to it. US oil is another market that we have focused on before when we did the previous video on, I think it was a week or two ago. We basically were looking at this very level here. The 20 period moving average was there, and we have a support. Those were coinciding, and 23.6 Fibonacci retracement isn't that far either. And now the market retraced almost to our support level, and then the buying started right above it. This is interesting because yesterday we had news from the US that the crude oil stockpiles were huge. Cold weather was a factor in here. Let me give you the exact numbers here in the report that we published today. The crude oil inventories jumped from, they jumped to 21.6 million barrels the analyst consensus was estimating there to be a draw of 1.3 million barrels, but really the inventories jumped quite high. So this should obviously bring the prices down in oil, but now we had price rallying yesterday, so that gives you an understanding that there is underlying demand, or the investors see that a jump in the inventories being as a just temporary spike. So, but as usual, the price action itself is the only truth in the markets. As long as we see the price making higher lows, honoring support and breaking resistances, then we do have a bullish case here. At the moment, momentum to the upside is there. We do have a bit of, after an extended rally, we have some increased volatility here, so that could turn into a market top. Obviously, any market can turn up or down at any moment of time, but key levels are there to guide us and price action around those levels. So if the market keeps on going, breaking resistances, then yes, great. If it makes higher lows, then yes, we believe in the momentum. If the market breaks this support here, then obviously we have a bit of a market top there, and the oil is more likely to come down to these levels. So that's what we are seeing in the crude oil price at the moment. In the last week's video, we focused on gold when it was trading up here near to that resistance, and we basically pointed out the potential on the downside and said that it's likely to move lower. And now the gold has moved quite a bit of lower. Let me show you. We basically have come all the way down to the channel lows. When gold was trading somewhere here, we said that yes, if this level breaks, then the next significant support can be found all the way down here, where you have this low, this historical support, and you have 61.8 Fibonacci retracement roughly coinciding. So gold has been coming lower, and it has been trading fairly close to the channel low, and the reason why gold hasn't been in favor is really in rising US T-bond yields. Gold doesn't have any yield itself. If you own physical gold, you have to pay for the storage, so there are costs associated, and therefore the only way you can make money out of gold is to really get your timing right and have the asset itself to appreciate. So capital gains are the only kinds of returns that you can get from gold. Therefore, if another asset class like T-bonds are paying a higher yield, then obviously that asset class is there's competition on gold, and money flows out of gold because of those reasons. So this is why we are at the moment trading fairly close to support, and maybe we get another extension down here, and then we have to see how the price reacts to the level. The next significant level again is there around the 50% Fibonacci retracement, around 1760, 1763. So that's where gold is trading at the moment. Let's move forward. Here's another market that has been selling off lately. It's the share of Johnson & Johnson. This stock has been trading higher earlier, but then the trend line was penetrated. We had a return move to the trend line. The bulls couldn't take the market any higher, and the price collapsed. We have penetrated the support area here and are now approaching another interesting level. We have 50% Fibonacci retracement level, and we also have these highs here. So it is definitely a potential level, and this is a defensive stock. So if the technology stocks, I should say, keep on coming lower, then at some stage people will move their money into more defensive plays, and Johnson & Johnson definitely is one of those. Now, if this market just keeps on plummeting lower, then the next important levels come down here. They are around some 148.30 to 149.70, where we have 61.8 retracement level and this historical low here, this support. So those coincide there. That makes the level interesting. If we get a rally from this area, if the traders start buying it here, then there's about 4% upside here, and maybe even further to the next interesting level, 6.97% roughly. And so yeah, that's what I'm seeing in this market. We quickly move on as we have are limited in time. Just a moment. And here we have one of those technology stocks that really don't look good at the moment. This is Google, and basically we had this market jumping higher. We saw this bull trap created, and all those people who bought up here are now trapped in this bull trap. Market since then traded lower. The little trend line here has acted as a resistance, and even though the market is now at support, it looks a little bit not that strong. If the support breaks, then there's about 4% downside here to the next important level, which is around 1927.16 to 1936, 40 or 50. So we have 50% Fibonacci retracement, this high here coinciding, and the 50 period moving average isn't that far either. If that level doesn't hold, then the next important level is around where we have 61.8 Fibonacci retracement and this rising trend line support coinciding. So this is why Nasdaq index looks a little weak at the moment, because it was some big stocks like Apple and Google were kind of extended to the upside, and then there was weakness. So let's see how this plays out. I think this is all the markets we want to cover this time, and as usual I suggest that you always trade safe, and I'll see you soon on the next video.